December. Welcome everyone to your brand new edition of Business Morning, this Boxing Day, a public holiday for businesses and markets, not just in Nigeria, but around the world. Let's get some stories out there for you. What's making Wednesday business briefing? Nigeria's State House issues a press statement of stern anti-corruption warnings on Christmas Day to political appointees, government officials, aides, and party officials, warning them against influence peddling for corrupt pecuniary gains and other forms of extortion. The senior special assistant to the president in charge of media and publicity, Garba Shehu, says the presidency is now embarrassed by complaints of extortions of innocent people by self-serving name droppers and influence peddlers. Garba Shehu says the president, that is President Muhammadu Buhari, would not tolerate any conduct by anybody to use the president's name to extort innocent people. According to him, those not genuinely committed to this vision of anti-corruption in the corridors of power would be weeded out once caught and punished accordingly. Meantime, a new report says Federal Capital Territory and 10 MDAs are owing 178.09 billion naira to the Debt Management Office. The monies were raised via bonds and backed by MOUs and are due for repayment since December last year. Let's track this for you in a bit more details. Look at the Federal Capital Authority raised 15 billion naira via bonds and to fund health and education, and is currently owing about 7.09 billion in repayment on that bond. The Ministry of Finance, according to the report, raised 6.3 billion naira for consumer car finance schemes for public servants. Out of that, the sum of 2.66 billion naira is still outstanding. And this is a bit of a legacy debt from the BPE. The total of 114.55 billion naira was raised by the BPE. 63 billion out of that was raised by the BPE via bonds to settle the botched Nitel sale to Transco years ago under the previous administration. Now that money is yet to be repaid. Now another 54.55 billion naira was also raised by the BPE as terminal benefits for the workers of Nitel. Those monies are yet to be paid. The Bank of Industry, according to the report, is also owing 2.5 billion naira. The Ministry of Transport got 12.5 billion naira via bonds for the purchase of locomotives for the rail lines that are being constructed. The Ministry of Defense, according to the report, raised 35 billion naira via bonds and is currently owing 11.28 billion naira in repayment. And finally, the Ministry of Mines Steel Development borrowed 2.24 billion naira for the salaries of workers or salary arrears of workers of Ajaokuta Steel in Kogi State and the iron ore facility in Itakpe. That's following the money. Let's get into something very different. This is a very exclusive interview with the Acting Director General of the Securities and Exchange Commission, Mary Uduk. She's live to us this morning from our Abuja studios. Thank you very much, Madam Director General. We appreciate your time coming on the program today. Just a few questions on the year so far for the SEC. We thank you very much. Let's begin this a little bit from where we are as far as the external developments that could have impact on Nigeria's capital market, in particular the interest rate hike by the U.S. Federal Reserve.
Thank you very much, Mr. Mofai, for having me, and Merry Christmas. I want to say that approximately 50% of the transactions that are carried out in the capital market are done by foreign investors. And as at the third quarter of 2018, the capital outflow stood at 513 billion, as against 477.7 billion naira incoming. We can see that the impact of increase in interest rates in advanced countries, not just the US, has impact in capital outflows, therefore leading to reduced performance in our market. I also want to say that the increase in interest rates in advanced economies, not just the US, does not affect only Nigeria. It also affects other emerging and frontier markets in the world.
Okay, so Madam DG, Madam DG, because of time, so I'm sure the SEC is doing quite a number of things to boost investors' confidence in our market, both local and foreign investors.
Yes, we are doing a lot to boost the investors' confidence in the market. But I want you to know that both foreign and local investors are very good for the market. For instance, for the foreign investors, because they trade their shares, all of the time, it leads to price discovery, as against the local investors that just take a long-term view and hold their shares. So both of them are good in the market. But in terms of confidence, we are looking at two types of confidence. Are you looking at the confidence that says that investors are afraid because they feel that capital market operators will mismanage their investment, or we are looking at confidence that because of the volatility in the market, so investors are actually risk averse and they are not very sure how their investments will perform. And therefore, for the first one, we have a number of initiatives that we have put in place to enable investors, to boost investors' confidence. For instance, we have the issue of the e-dividends, the direct cash settlements, and of course the multiple subscription initiative that we have put in place. And then for the second one, for the second one, I will say that the investors also have to take ownership of their investments. They have to be able to monitor their investment. They have to be able to attend annual general meetings and also read annual reports that are sent to them. The Commission will also protect them as a result of the initiative that we have also put in place. For instance, the National Investor Protection Fund that we have in place, the risk-based supervision that enables us to supervise the operators to ensure that they do not do what they're supposed to do. And again, the management, the framework, that enables them, the complaint management framework that enables them to know, where to complain to and how long it will take for their complaints to be resolved. I also want to say that for those of them, who are afraid because of the because they are risk averse in the market, they should be able to get their financial advisors, to talk to and advise them. And that is why we do not allow every investor to invest in certain shares. Certain shares are reserved for what we call high net worth investors, who understand what they are investing in, and who also understand the workings of the capital market, and they can afford, to pay, people to manage their funds for them. We also advise the retail investors to go ahead and invest in what we call a collective investment or mutual scheme. Mutual funds, as the case may be, because those are, managed independently, and they are professionals who manage them, and they are diversified investments that they can manage. And therefore, with that, we expect that investors should be comfortable and confident in the work of the SEC in protecting them. Thank you.
Madam Director General, fintech or financial technology is the buzzword, and we're aware that this year you've had some quite some engagement with professionals within the fintech financial technology to bring the SEC bring a more collaboration and integration of fintech into the market. What have we done this year?
We know that technology is driving a lot of things right now in the market. For instance, when it comes to the banking system, technology drives a lot of their payments, where you buy things, you buy anything through the phones, you transfer monies, and you also could actually now get loans, you know, from just through your phones. But in the coming to the capital markets, there are two areas that technology has really driven the capital market in terms of improvement in processes. You know, for instance, the use of blockchain, you know, to do settlement. For instance, FX right now uses blockchain to drive its data. And then you also have the issue of product. In terms of products and platforms, right now you have technology driving, you know, the platforms that people are coming in to invest. For instance, you have the crypto assets, you have all the other fintech-related.
Yes. The idea around the fintech is get a sense that, yes, the market also need technology. But again, because of time, we'd like to move on very quickly. One topic we'd like to touch with you. Sorry we had to get you out of your Christmas holiday and all of that to get into the studio. We apologize for that. But where are we as far as Access and Diamond Bank merger is concerned? The SEC is very crucial to the exchange of shares and how this corporate marriage will look like next year. Where are we at that moment? Where is the SEC?
In terms of Access and Diamond Bank proposed merger, we have received, I can say definitely that we have received a formal notification informing us about their proposed merger, but we have not yet received any formal application in respect of the merger. But some people are worried about what will happen to shareholders, you know, in both banks, particularly Diamond Bank. I would rather say that the merger, whether or not both institutions should merge, is actually in the hands of shareholders, as they would be the one to vote to support the merger or disallow the merger, depending on what are the proposals that are put before them. So it's actually the shareholders that the consummation of the merger, it is in their hand that it lies.
Okay, a final question, Madam DG, because of time. The multiple share registration issue, the extension is till December next year again. Why do you think folks are a bit reluctant to step forward to regularize these multiple share accounts?
I wouldn't say that they are reluctant to regularize, because it is in their interest for them to regularize their holdings, you know, to consolidate them into their formal names. We already know the background, which is that during the banking and insurance sector consolidations, way back in 2005 to 2007, a lot of investors, you know, completed more than one application forms, you know, and of course they did that by juggling their names and sometimes using fictitious names. But what they failed to realize is that the capital market has a way of checkmating, you know, some violations, because, you know, for you to be able to claim these shares, you have to be able to identify yourself, and therefore the names that were juggled and the fictitious names do not have identities that are traced to these individuals, and therefore they were not able to claim their shares, and because of that, their certificates are not with them, so they can neither trade nor be able to take and they'll not be able to take the benefit of what those shares that they paid for, would give them, which is like the rights issues, the bonus shares, and as well as dividends. And this is why we have, this is when we realize that a lot of the accumulated unclaimed dividends is as a result of these issues, because investors are not able, couldn't claim their shares, and they are not able to get the dividends. And then what have we done? We have gone back to them we are mobilizing all of the receiving agents at the time and asking them to please look back into their records and see and look at these names, and particularly for those that were paid for, and get them, to the registrars. And investors are also advised to contact their registrars. I want to stress to Nigerians that there's absolutely no penalty attached to this reconciliation. We just want it for the sake of the market to be properly reconciled, and also for their own sake to be able to take ownership of their shares and also reap the benefit, the dividends or the benefit of having bought those shares. And therefore, we are not penalizing them. We want to be able to help the market and let the market be transparent and investors' confidence return.
Thank you very much, Acting Director General of the SEC, Mary Uduk. Madam, we thank you very much for your time this morning, bringing us up to speed on some of the top issues making the rounds at the Nigeria securities market. Thank you very much. Enjoy the rest of your holiday. Let's get back to you after the break. We're talking about inclusive growth beyond the GDP numbers. What does it mean to have an inclusive growth? The numbers, beyond the numbers, as well as human capital investing. We'll have all of this with Tunde Lemon, a former Deputy Governor of Central Bank of Nigeria, live here for a two-part interview.